Are meme coins the only way to make money in crypto right now? I mean, they're up 1,300% since January. In today's episode, we're going to tell you the most profitable crypto narratives in 2024 and how to find balance between chasing 100x versus investing in real businesses that will be around decades from now. Welcome to Milk Road Radio, the easiest path to get smarter about crypto. I'm Jay Hamilton, joined by my co-host Kyle Reedhead, and we believe that on-chain is the next online. This is the opportunity, and we're here to guide you to capitalize on it.
What up, friends? Today we've got a big episode, lots to talk about. L2s to $1 trillion by 2030. We'll discuss a big report by VanEck, plus top crypto narratives, as Jay mentioned already. The three big winners of March, PayPal and Ripple, come out with some big news around stablecoins. We've got the U.S. government with $2 billion worth of Bitcoin, and that might be on the move. We've also heard this rumor a million times over the last 2 years, so don't get too scared. Of course, we'll talk about Memecoins, Degen Chain, SBF going to jail for a long time. We've got so much to cover here in today's episode. Welcome to our first weekly roll-up as Milk Road Radio.
Milk Road Radio. And to celebrate this, Kai, we've got an exciting announcement. We want to give away a few Milk Road Pro memberships. We want to give away some Milk Road swag. And all you have to do to enter is follow us or subscribe to Milk Road Radio on Spotify, on Apple, on YouTube, wherever you are listening to this. And then take a screenshot of it, post it on Twitter, and make sure you tag at Milk Road Daily, and you'll be entered into the competition. And next Tuesday, we're going to pick a bunch of you, and we're going to hook you guys up with a bunch of free stuff. But in the meantime, we want to make sure that you have an opportunity to capitalize on this cycle and make the most of your crypto investments because, oh boy, the opportunities are big right now. We're going to talk about that in today's news about how many things are going to the moon in the past quarter. But right now, we got a special discount for you, our Milk Road Radio listeners, our first listeners, whoever is out there. We want to give you guys 25% off Milk Road Pro. This offer expires next Wednesday, April 10th. So make sure you get in. Kai, why should somebody sign up for Milk Road Pro? What are they going to get from that?
All the alpha you possibly need? No, it is institutional grade level research, but it's explained in a simple and easy to understand way. So if you want to really understand what's happening in this space, know where to allocate your capital, and understand strategies throughout this cycle, this is the place to do it. There's a bunch of reports that we put out. We've put out over 60 or 70 of them now. They go out every week. We have where are we in the cycle indicators in our actual free Milk Road newsletter, but it's paywalled for the pro people. And there's a community that is just going bonkers over the last couple of days as we've launched it, where you can get the alpha from a bunch of degens that are just playing around in this space. So much is included in Milk Road Pro. Grab your 25% off. And by the way, also do the competition. If you get a free pro membership as a result, we'll just refund you, so no worries. But make sure you at least get in on this discount before it is done. It's a big one.
Let's go. All right, Kai, as we always like to do, start the episode with the market watch. What's going on in Bitcoin this week?
Yeah, Bitcoin is having a little rally today, up 2.67% on the day, down 2.4% of the week, though, and basically flat on the month. So not too much is going on in the Bitcoin world. Ethereum is up 1.7% on the day, down 3.68% on the week, down 7% on the month. It's about time we have a bit of a pullback in these assets, though, so it's fine. I'll tell you what's not down. That's Solana, up 1.3% on the day and up 40% on the month. That's just coming because it had a massive pullback as well. So assets continue to just sort of, be in the crab market that we're in. Not much happening since we surpassed all-time highs of Bitcoin, but that is okay. Overall, Jay, the crypto total market cap, 2.46 trillion. So not much moving there. But if we look, Jay, in the last 7 months, look at this. A lot of green candles in the last 7 months of Bitcoin. I have the chart up here. And for 7 months straight, we have closed a green candle, meaning we were up in those months. This is a record. Bitcoin has never had 7 months straight of up only, basically. Now, obviously, we are red here in April, but we're only 4 days in, so who knows what will happen at the end of this month. But we've had, if we look at last cycle, here was 6, and then we went into a long bear market. Obviously, if we look 2 cycles ago, we had a ton of green ones, but there was always some pullbacks at least. We haven't really had that so far this cycle. Still early days in the cycle, so we'll see what happens. But just wanted to point out, 7 months straight. So nice job, Bitcoin, just kicking ass. So where are we, Jay, in the cycle currently? I wanted to bring up this chart. I shared this in our pro community yesterday, or maybe it was 2 days ago. I can't remember. But as we had a bit of a pullback the other day, I just wanted to show a support level that we've hit now 3 times in the last few weeks, which is ETH sitting at around 3,200-ish. I charted this out a long time ago as a resistance level. We smashed through it, and then we've now come back and touched it 3 separate times. In this latest pullback, people were wondering, okay, have we hit the bottom yet? I've got a few little suggestions here that I'm going to go over, but one is just your clean support and resistance levels. On ETH, 3,200 continues to be support 3 times now, as I said. And so to me, I think we've probably hit the bottom of this mini pullback that we're in. So we'll see where things go, but those support levels tend to be holding strong. The other reason I would say we might have hit the bottom is Tether is printing a hell of a lot of stablecoins right now. It just printed $1 billion in Tether stablecoins. So massive jump in their market cap, obviously, as a result of that. But typically when this happens, you see it tends to be the bottom of a pullback. I have a chart up here that was shared by Lark Davis. And every time that Tether prints a bunch of tokens, that's generally shows that we're at the bottom of whatever pullback we're in. Now, why is that happening? It's not because Tether is buying a bunch of Bitcoin with it. It's because this is institutions generally, or just whales, that need a bunch of stablecoins so then they can go and deploy it into the market, right? They don't go from fiat into, let's say, Bitcoin or ETH or whatever. They typically buy a stablecoin and then they emit it through stablecoins, and then they can go and, buy something on the market. So whenever you see a big jump in Tether, USDC as well, but to a lesser extent, that generally means we've hit the bottom in whatever little pullback we're in. Though Tether is also buying a little bit of Bitcoin, Jay. They're at $5 billion they hold of Bitcoin. So that's quite impressive. They continue to buy. They're not quite Michael Saylor, but Tether is at least continuing to buy up a little bit of the Bitcoin supply. Let's move on to the ETFs, Jay, before we finish up our market watch. The ETFs obviously have been a hot topic. We've talked a ton about the US ETFs. Hong Kong is coming in now, and they are planning to launch about 10 ETFs by the end of Q2 this year. So this is spot Bitcoin ETFs. Some of the biggest asset managers in Hong Kong have applied already. So Value Partners and VSFG, they've applied. It sounds like this is going to get approved, and it's likely going to happen in the next couple months, according to Bloomberg reports. So, the other cool thing is these are actually in kind, which the ones in the US are not. And what that means by in kind is when you buy your ETF with dollars in your whatever exchange account, you can actually get your Bitcoin as a refund or in return for your ETF shares. You can't do that in the US. You can only get dollars back. But the ones they look to be potentially applying or approving in Hong Kong are going to be ones where you could actually convert it into actual Bitcoin. So that's really, really cool. We were hoping the US would do that. They didn't yet. Maybe one day they will get there. But that's quite interesting. But speaking of these ETFs, the US spot Bitcoin ETFs have been on an absolute tear. Obviously, we've been covering it every week. But look at March. Eric Balkunas says this is March madness. The volumes in the Bitcoin spot ETFs, Jay, have 3x'd since January in the month of March. It was a massive month for ETFs. Tons of inflows, also some outflows with GBTC, but that's still expected. But wow, what a beast. Did you expect it to be this much, Jay, this soon?
No, definitely not. There's no way I expected it. I don't think none of us in this world understand the power of TradFi and the power of institutional. Even though you might sit back and say, oh yeah, of course it's going to be big. I think we all thought it was going to be slower. The question is, where does it go from here?
Yeah. Well, so before we get into that, answer that question, I just want to go from one other tweet that we have out here. A lot of people talking about the Ethereum ETFs. Obviously, the due date for the next one that's up, where they have to either agree or approve, or deny the SEC. This is in, I think, May 23rd or something. But it's been kind of crickets from the SEC. Just yesterday, the SEC put out a public comments for the Grayscale, the Bitwise, and the Fidelity spot Ethereum ETFs. A lot of people on Twitter saying this is bullish. It's not bullish. This is just normal procedure. Bitcoin had to do this. Every ETF in existence has had to do this. A few months before, they have to put out for public comments. So really not a massive deal by any means. Don't let people tell you this is bullish. It's just protocol. We still are getting kind of crickets from the SEC. So not great. But on the Bitcoin side of things, in terms of the ETF, as we said, big things happening in March already. But we had a tweet here from Matt Hogan, who is, I believe, the founder of Bitwise, CIO of Bitwise. Yeah. So he's in the ETF race already. They have a Bitcoin spot ETF. They are soon applying for an Ethereum one. But he put out a tweet just talking about, he's been sort of traveling around for the last few months since the ETFs went approved, and has been speaking with a bunch of the institutions and funds to see what they're thinking about allocating to these ETFs. And the first note was, it used to be maybe 1% will allocate to crypto, and now, or to Bitcoin specifically, I guess, and now it's going to 3%. So a lot more and more of these funds are now saying, hey, you know what? We think we need a 3% allocation rather than a 1%. So that's really, really cool. The other interesting point that he made in this was, look, on January 15th, a bunch of people got access to these ETFs, but most actually still don't have access in terms of the big funds and the big institutions. They have to still get approval. They have to do a lot of paperwork and things to get access to this. And so once they get access, which he said should be by within the next year, they'll all slowly start to get onboarded and get access. That's when sort of the passive flows come for Bitcoin. So a lot of the current ones is probably retail, some institutions, etc. But once these other bigger funds get in, these are pension funds and things like that. This is when it's just passive. And these are when you start to invest for your child's education fund, right? You throw it in a 401k or an RSP, depending on what country you're in, or whatever funds, retirement funds, etc. You just sort of dollar cost average, right? Generally your work takes a little bit off your paycheck and throws it into a fund. These are the kind of funds we're talking about where just it's nonstop. Every employee is basically adding a certain amount of their paycheck into these funds on an ongoing basis. The way these funds work is they basically buy the entire economy. So if it's in the US, they're buying everything. They're buying stocks, they're buying bonds, and it's usually ETFs of the NASDAQ, ETFs of whatever, and it's just they own everything. And so whatever ends up working out, they end up getting a bit of a gain from it. The average is 10% on average per year, their portfolios are going to go up. But what a lot of these funds are now doing is instead of 60% equities, 40% bonds, they're adding in this 1 to 3% Bitcoin ETF. And so what's interesting is we're now doesn't matter what you're investing for, if it's for your child's education, if it's for your retirement, you don't even really realize it, but you're actually investing in crypto. And almost every fund is going this way and racing to get approval for this. And so this was this big story of look, the launch has been great over these last 3 months. March was massive, but we still haven't really seen the big flows that will come. And these flows won't just be a one-time thing on Jan 15 when they finally got approved. It's just passive every single day. More and more money is coming into these just passively, and people don't even really realize it. And that's what really matters here. Is probably going to change the structure of Bitcoin. Going to make it less volatile, and probably we won't have these massive pullbacks on a cyclical basis. We'll still have big ones, but probably not the 80% like we typically have. So that was his sort of main takeaway. Just very interesting to see that. Ideally, when Ethereum ETF gets approved, this will also be included in there, you would assume, but obviously we don't know just yet. So let's see where things go. Oh, and if the ETF stuff is not bullish enough and the ETF's coming in Hong Kong, don't forget, guys, the halving for Bitcoin is coming in just a few weeks. What are we, April 4th? It's coming on April 20th, 420, which is hilarious that it's going to happen on 420. The simulation is real. This guy, the tweet that I have up here says the pump will be even more real. I'm not sure that's going to pump on the day of the halving, but let's see what happens. Either way, lots of bullish news and lots of exciting stuff for markets.
All right, so let's move from the market watch to the top stories of the week. And this week's top story actually kind of fits well with the market watch. Great transition as we look at the most profitable crypto narratives in 2024. I'm just going to read them out for everybody here. First, we have Memecoins up over 1,300%, real world assets 286%, AI 222%, DeFi 99%, DePIN 81%, L1s 70%, GameFi 64%, and L2s 39%. Kai, what was your first take when you saw this?
I mean, I figured Memecoins would be number one. Thought AI would be number two. Did not think RWAs were that high. I guess I don't pay attention a lot to the tokens of RWAs, so maybe that's why. Interesting to see layer twos in eighth. Now, it doesn't mean they're in the last place of all the narratives or all the sectors. Obviously, there are many more than 8 sectors. and 39% in any market would be really good. But when you're comparing to friggin' meme coins like Bonk and Degen, you got 1,300%. It makes it look pretty tiny, but interesting that it was only 39%. I think they'll have their moment eventually. Gaming still pretty low as well. It will likely have its moment too. But good to see DeFi finally coming back. DeFi has been struggling for a long time. It was the first to get into the bear market in the last cycle, and it has just struggled ever since. And I think DeFi is making a bit of a comeback, so that's nice to see too.
Yeah, DeFi had a good run on the backs of Uniswap, which had their fee switch proposal. That was one of the big moments there. Jupe, obviously, new token that came out. That really pumped DeFi. Maker's been doing really well. So yeah, it's been good to see DeFi. Yeah, my first take on this was kind of what you said around L2s, is you look at this and it just makes you want to chase 1,000 or 100x returns, right? Because, L2s is at the bottom at 39%. A 39% increase in any regular investment strategy over one quarter would be like bananas. You'd be so pumped. But when you're in crypto, it's everything skewed, especially right now when everything feels like it's pumping and going to the moon. And so it makes it tough to know where to allocate your capital. I think the thing to know is Memecoins is at the top of this list because there is no way to truly value a meme coin. A meme coin is one of the only things that can go to an insane amount that makes 0 sense. You can always kind of have an argument that that's what a meme coin is. It's pure speculation. It's a casino. It's gambling. It could do that and it could stay there throughout the bull run. Whether it stays there in the bear is totally different. But the rest of these things are they're all legitimate businesses. As you look through the list here, and there's
Whoa, they are definitely not all legitimate businesses. I would say true. The majority are probably not, if we're talking about crypto tokens. But I know what you're saying. There is a way to value things that are, RWAs or AIs that have revenues and things like that. Meme coins, totally different. And so it makes sense that they're going to be just pumping this much. They're also just having a moment too. But who knows? That may continue throughout this entire cycle.
Let's look next to the 3 big winners of March. So the Milkman every month at the end of the month writes a newsletter where he talks about the big winners of the month. And we want to just kind of share those winners with you. So we had a little chat with the Milkman before we came on air today. And first up, there was Base was a winner in March. Base just went mental in March. Let me read some of these numbers to you here. Daily transactions jumped from 400,000 to 1.5 million by the end of March. Weekly active users doubled and hit new all-time highs. And on the profit side, Base also went bananas. Total network revenue hit 10 million in March. First time it's ever done that. And weekly profit jumped from 500,000 to 4.4 million by the end of the month.
Yeah, a lot of this comes off the back of EIP 4.44, which obviously we're talking about a ton on the podcast, and we knew this was going to be a bullish signal for L2s. Base seems to be the one that's jumped the most from this. We're actually in the process of writing a pro report right now for all the pro members out there. Not this week, but next week, we will have a deep dive on Base and its moment that it's having. And we're going to break down 5 ways that you can capitalize on Base's moment. Base doesn't have a token. Every other L2, every other blockchain out there has a token, or at least is hinting that we're going to launch a token. Base is the only one that not only doesn't have a token, but they've specifically said we're never going to have a token. Now, I don't believe that they're never going to have a token, but they're explicitly saying that. But there are still ways you can capitalize on Base. And so make sure you go pro. Again, you can get a 25% discount in the show notes below. But pro members that are already signed up, get ready. Next Saturday, going to be a banger.
Super stoked for that, Kai. Next, the other 2 big winners from March were Ethereum, had the Degen upgrade, BlackRock launched the Biddle Fund, and then a bunch more big name firms jumped in to get in on the ETH ETF, filing paperwork. Grayscale, Vanek, BlackRock, Hashdex, Fidelity, Invesco, so many more have all filed paperwork. So we'll see what happens in May. And then, of course, the other big winner in March was Memecoins. I feel like we're going to talk a bit about Memecoins later in the episode, but it's just insane to look at. Doge up 110%, Floki up 320%, WIF over 300%. It's, and then there's some new meme coins like Degen that's up 1,700%. We're going to talk a little bit about Degen as well, and them launching a chain and what that means a little bit later in the show. But wow, March, what a month.
On March 19th, I put a call on our Discord, just not in the public channels, in a private channel, to someone on our team who was playing around with meme coins. I said, I don't play around with meme coins, by the way, but I was like, if there was one coin I would buy, one meme coin, it would be Degen, and this was on the 19th. It was worth like 0.0003. I don't know how many zeros in front of that. But anyway, within 9 days, it had 15x. And I was like, I actually was going to buy it just for jokes because Raul, the guy from our team, kept saying, like, we need to do meme coins, you need meme coins. And I was like, absolutely not. And I was like, you know what? I'll throw like $500 in just like for fun. Damn, that would have been real nice. So I'm kind of kicking myself on that one.
Well, it's all good job for making the call. Next time, let's actually put some money into it as well. Okay, let's go next to the next story. L2s might have been the lowest gainer so far this year, only 39% average up L2s, but VanEck is super bullish on L2s. They came out with a report just this week that values L2s by 2030 at $1 trillion. Kai, you want to break this down for us?
Yeah, I mean, it's a good report. You guys should read it. So we have it up on the screen there, but we can put it in the show notes as well. It is a decent report where they basically look through all the different transactions and estimations of what they think is going to happen on L2s, the costs, the fees, etc. So it's really well detailed. I'm not going to go through all of it here. The interesting thing that they came up with was we always talk about profit for an L2, but we do this on the revenue that they make off gas fees, and then we just minus the amount that they're paying Ethereum for like to settle. But what they did is they took it a step further where they have all these different costs, even things that are off chain, so sequencer costs and et cetera. And so they looked at the margins on an L2 per transaction. And right now, the best one currently, but this isn't really, I would say this isn't really a sustainable thing, is Polygon ZK AVM they're making 68 cents per every transaction, pure profit. That's their margin. But their gas fees right now per transaction are $1.40. So obviously, that's not the future. But Base, and I guess this is actually before the upgrade, so this has probably changed, but Base is sitting around 10 cents margin. But again, this is when Base was at 44 cents per transaction. I mean, now we're in the pennies. So I actually wonder if they need to update this. Interesting, because they just released it this morning, but they're kind of releasing it with old data. So that's actually quite interesting, but I'm sure they factored it in. There's a ton of information here. But either way, looks really, really bullish. They're just talking about the growth that's going to happen over these ecosystems and how that will translate into the tokens itself. It's pretty interesting, some of the numbers they have. The estimated revenue they have for L2s in total is $48 billion by 2030. So pretty wild stuff, and definitely recommend you check that out. Only 39% in this last quarter, though, but we've got, what is that, if we were to reach is it $1 trillion in tokens? Yeah, $1 trillion token value. I think in total, all the tokens are probably worth around maybe 30 billion right now. So we're looking at like a 35x in 6 years, which is like in meme coins, that's crap. But anything else, that's like massive. So just depends your perspective, I guess.
I'd rather take the safe 30 to 35x than the maybe get 1,000x, but likely get wrecked.
When you say safe, that's buying dog with hat, right?
Yeah, right. Yeah. No, it's actually buying a cat with a hat. It's as long as it has a hat. That's all I really care about. Yeah. Okay, let's go to the next story. Some stuff happening with stablecoins, a use case that we have talked a ton about. Big believers. If stablecoins was the only use case in crypto, I still think we could change the world with that use case alone. Some news coming out of PayPal and Ripple. Kai, let's start with PayPal. What's going on there?
Yeah, so PayPal just announced this morning that customers will be able to use stablecoins for international payments, so cross-border payments with including 160 countries, and it will be free. There's no transaction cost. Originally when I read this, I was like, oh, stablecoins are enabling free transactions. Makes complete sense. That's the idea all along. But then as I read the details here, I'm a little bit confused. So it's only US clients. Don't know why that is, if it's something on chain. But then as you read the details, it says that US users of the company's international payment service, Zoom or XOOM, whatever that is, can convert PYUSD to USD and then send money to recipients in approximately 160 countries without being charged transaction fees. So that means you get rid of the stablecoin, buy the normal US dollar, and then you can transact without fees. Doesn't really make sense to me. I thought the whole point of the stablecoins was to make it really cheap and fast. And this whole announcement, which was meant to be bullish for stablecoins, is actually saying if you want the free fees, you've got to get out of the stablecoin. So maybe this report, again, this just got announced before we went live. So this is the block that's reporting this. Maybe they just wrote this wrong. I'm not quite sure what's going on yet. Probably by Friday, by the time you guys hear this, we record this on Thursday, by the way. Maybe we have some clarification. I was all over Twitter trying to get some clarification here before we went live. Couldn't get it. So I don't know what's going on, but either way, at least it's free to move USD around 160 countries. That's pretty bullish. Whether that's for crypto or not, I actually don't really know. So very weird.
Look, regardless of whether PayPal is doing this completely on-chain or whether you have to use USD, we'll figure that out for everybody, Kai. But one thing is for sure, all money is going to be moved on-chain within the
100%.
next... I mean, already, I much prefer to move... Whenever I need to move money, I'm always asking somebody to just send me money from the US recently, and, cross-border is difficult. And I was like, are you on-chain? Can you send me some USDC on base? And she was like, I don't use crypto. And I was like, I don't know what base is. Teach you, but I don't want to. Anyways, PayPal taking a step in the right direction. What's going on over at Ripple?
Yeah, I mean, so Ripple has always been the network or the token or the project anyway that was going to solve cross-border payments. I've never really dove too much into Ripple, so I can't speak too much on it. I feel like crypto's already solved cross-border payments. We don't need a specific protocol for that, but they do it for institutions. So they have a lot of connections in with banks and stuff like that. So they're helping on the back end there, which is cool. But Ripple has just released that they are launching a stablecoin, which is pegged to the US dollar, which to me makes complete sense. If they're trying to solve cross-border payments, probably using a token like XRP, which is very, very volatile, isn't the solution. We've all understand that. But stablecoins are a great solution for this. And so it makes sense to me that Ripple would do this. I was a bit surprised, but yeah, I think it's a big move. They haven't done it yet. We don't know when they're going to release it yet, but they've just announced that it's coming. So pretty cool. And again, this is Hater that we have the tweet up here. I don't know how to say his name actually, but he's, I think, the founder of OKX. And he just had a quick take on it, which is basically Ripple is a network that has a ton of support with a bunch of banks. And so a stablecoin actually makes a lot of sense. And it's going to educate a lot of banks and a lot of institutions about stablecoins. Whether we end up all using the stablecoin on Ripple and this becomes like a public stablecoin that anyone can use and we start to use it on chain or not, who knows? But at least this is going to get into a large network of those who are, trying to move money and are in this space. And so I think net positive for the space, but we'll see if this beats PayPal stablecoin or obviously USDC or Tether.
Yeah, I mean, Ripple is clearly going after the Western unions, the large remittance, institutions in the world, which is huge because those institutions move trillions of dollars. It's just insane. So I think there's a big opportunity there, but exciting to see more stablecoin usage. PayPal, Ripple, great to see that. Okay, let's go from stablecoins to some news out of the Silk Road case. You guys might remember Silk Road was a large case in the U.S. where the government seized over 30,000 Bitcoin from this illegal operation that was using Bitcoin to launder money and to sell illegal goods. I won't get into the details of what they were doing on Silk Road, but the government apparently is moving this 30,000 Bitcoin. Now, this Bitcoin is in a Coinbase deposit address, and it looks like, I mean, Kai, I don't know, what is the government going to sell this 30,000 Bitcoin, or would they not just keep it? What are you doing?
They have
Bitcoin.
They have put out notice that they're going to sell this Bitcoin. It's worth $2 billion, by the way. But they have said they're going to sell this many times. And then there's always been these, this was just a test one. And then they did, I don't know if they moved it all yet over to Coinbase. Once it's on Coinbase, we don't know what they're doing. So we don't know if they're selling. But I imagine if they're going to sell $2 billion of the Bitcoin, it's going to puke the markets. But just this tweet alone, this rumor was sort of what puked the markets. I think it was yesterday or 2 days ago now. So it has an effect on the markets, regardless of if they actually sell or not. But at some point, the U.S. is supposed to sell us, and they've said they were going to. But I believe last year they said they were going to do it by the end of the year, and then they never did. So, I don't know what to believe anymore. But this rumor comes up, I don't know, every couple months. So expect it to happen again.
And when you're in a space where fundamentals matter, rumors like this are going to impact price for better or for worse. Okay, another quick story here. Grayscale launched a first of its kind proof of stake investment fund. This is called the Grayscale Dynamic Income Fund. Basically, the way this works is they're going to invest in proof of stake blockchains. And by investing in proof of stake blockchains, such as ETH, they have the opportunity to then take that investment, that ETH that they have in the fund, and they can stake it. And what they're going to do in this fund is they are going to stake those, whatever those tokens are that they're investing in, and then they're going to share the rewards of staking those tokens with the investors in this fund. We've never seen anything like this. Look, if you're listening to this show, you're very likely you're staking your own ETH or your own tokens because you understand how to do that on chain. The thing we need to remember is that most of the world does not know how to do that and probably won't ever learn how to do that. So funds like this are going to, in the future, be the type of fund that could get somebody not only the upside on an asset, but also get them the type of yield that staking can offer through a crypto investment fund, which right now, look, this Grayscale fund is only for, the headline says it's only for millionaires, which is such a clickbait headline. But basically, Grayscale has to, because this type of fund is private, they can't allow just anybody to invest in it. So you do have to have like over $2 million in assets in order to be approved for this investment fund right now. So it's not for everybody, but eventually you could see this going mainstream for retail.
And ideally, the ETFs just do this, right? At some point, probably not the first iteration of them, but at some point, the ETH and Solana ETFs, et cetera, that come out in the future, we'll just do this. And yeah, that's going to be a game changer.
All right, what else is a game changer this week is the Wormhole Airdrop for a lot of wallets. Yours, Kai, and I know a bunch of people in our community. Kai, bring us up to speed on W or Wormhole and that airdrop.
Yeah, the Wormhole Airdrop is finally here. It came out on April 3rd, so yesterday, as we're recording this. I woke up to a nice little treat in my wallet. I had a bunch of W in there, which is really, really nice. The mint was actually done on Solana. There was 670 million tokens. At the time of the launch, so in the morning, the market cap of W, which is the token, was $2.5 billion. The FDV was something like 14 billion. Scroll down. What is it now? 11. I think it was around 14 billion when I saw. If you guys are wondering, I sold all my W. Don't trust me on all things for airdrops. I am like 50-50 on getting it right or wrong in terms of like, I sell it and it just pumps like crazy, or I sell it and then it dumps. So sometimes I'm right, sometimes I'm wrong. This one, so far, I'm right. We're currently sitting at $1.15. I think I sold it at about $1.40 yesterday, which was a nice little present. So I really, really appreciate that, Wormhole. I did use them a lot, so I feel like I deserve it. Really well done so far. It's just a governance token, so there's not much utility around it. However, you can lock up your W, which is the way that you can do governance. So you either lock up your W to vote yourself, or you can lock it up and delegate those tokens to someone else to vote on your behalf. There is some speculation now, however, because Wormhole is a bit of an ecosystem and application things will build on top of Wormhole. There is the same sort of idea of what's going on with TIA or Celestia and a few others in this ecosystem, where if you stake your tokens, the companies building on top will airdrop you their tokens. There is speculation that the same thing will happen here with W. If you lock up your tokens, maybe you'll get an airdrop from Monad or others that are using this. So no idea if that's going to happen. It's speculation right now. But I'll tell you one thing that Wormhole did not do right, Jay, and this is not my idea, but Jeremy that tweeted this out, and he says, W would be 2x the current price if its ticker was whole instead of W, which, you know what? I agree completely. We'll add a little meme to it and, definitely works. And he goes, they did not study culture in the human brain. Just a killer tweet. Absolutely love that. For anyone, though, that tried to claim, it was a bit difficult. I mean, the claiming was easy, at least for me. It was trading it afterwards that was difficult. As I mentioned, W was minted on Solana. It didn't matter if you used Ethereum to use Wormhole or Terra or whatever. You could use anything. They're connected into 40 plus blockchains at this point. But the token itself was minted and claimed on Solana. But Solana's having some struggles as of late. We have a chart up on screen here, which shows that 71% of non-vote transactions are currently failing, which is pretty crazy. And that was the experience I had yesterday too. I was trying to just not swap, but I was trying to send from one wallet to another. I was trying to actually move this W into my ledger, and I just could not do it. It just was not working. Took 6 tries just to send it. So it was quite frustrating. But there's you'll see this chart a lot on Twitter. It's not that Solana's blockchain is down. A lot of people are flooding this a lot, and it's not the case. There is a full explanation. We're not going to get too far into it, but basically what's happening is the Solana blockchain moves fast. So the prices on it moves fast. The arbs on it, meaning the bots that are arbitraging, they move really fast. And so the issues that they're having is, it's not that the blockchain can't actually settle all these transactions. It's that we're not fast enough. The UX itself is not fast enough to settle or execute your transaction before the price or like whatever it is that you're trying to do on chain changes. And all of a sudden it's just, that's not possible transaction anymore. So the error is the same. It just says fails regardless. It's not a failure as a result of the Solana blockchain. That is still working well. It's more of a failure on like the UX side. Either way, it sucks for customers, like for users. You can't get your transaction through and no one likes that. So it's still a problem of Solana without a doubt, but it's not the Solana blockchain is not working. I think it's somewhat of a key differentiator for people to understand. There's, of course, things that we need to fix. You cannot have a blockchain that won't push transactions through. There's just a UX difference and some problems in that side of things right now. So hopefully that's something we can figure out, because I know I struggled. I spent a lot of time yesterday trying to move things around, and it was not fun.
Okay, let's go to Memecoins. We can't have a week go by in the roll-up and not talk about Memecoins right now. We're going to talk about Degen Chain in a second, which is probably one of the most interesting news stories that's come out of Memecoins this week. But first, I want to highlight one of the members of the Messari research team, actually the VP of research out of Messari, spoke at the Biddle. It's so hard to say build with the L on the end. Biddle.
HODL. Think HODL.
HODL's easy. Biddle, for some reason, always messes me up.
Weird.
So he spoke at the Biddle conference, which is a conference in Asia just last week. And he talked about Memecoins being the Trojan horse for crypto adoption. And I thought this was pretty interesting. So he said, crypto is often criticized for not having use cases for the average Joe, and that's a fair comment. But Memecoins actually have been successful consistently in bringing people on chain. And he talked about how Memecoins are really a way to monetize attention. And we are seeing that right now, in particular with the way Memecoins are being used around US politicians. You have Memecoins around Trump and Joe Biden, and the election is coming up. And you could see how these Memecoins will likely rise and fall in accordance with which politician is getting the most media attention. So it's kind of like Memecoins are turning into this long tail speculative service like lottery tickets or penny stocks that allow anybody to just speculate on culture, which we've never really been able to do. And as a result of that, everybody loves to speculate. I think as much as we might say that's not necessarily a good thing for everybody, some people might make decisions to speculate, then they get wrecked. But hey, do your own research, choose your own adventure. That's on you. But what Memecoins do is, because everyone loves to speculate and culture, everybody understands culture. Maybe not everyone understands finance. What is happening right now is we're inadvertently introducing a whole lot of normies to crypto and decentralization and crypto wallets just through Memecoins. So, hey, shout out for Memecoins for maybe being the onboarding ramp of 2024 so far.
It's the same idea as NFTs last cycle, right? Like last cycle, we brought in a lot of like creatives and artists that otherwise would not care about crypto, but they cared about it because they cared about NFTs, and many of them left, but many of them stayed. And it was a Trojan horse for that group of the population. I don't know which group of population Memecoins is attracting or bringing in, but that group definitely exists. I probably think that group's already in crypto, right? It seems odd to me that group would not be in crypto already. So like, is it really Trojan horse? I'm not sure that's bringing net new people. At least I haven't met a lot of people that came into the space specifically because of a meme coin, but I'm sure they exist.
Okay, so I can tell you who it's bringing. It is bringing a few key categories. One, it's bringing youth.
Right.
And when I say youth, I mean probably
underage gamblers.
Like it's bringing under 20, like young.
Another illegal use case of crypto.
Yeah, exactly. Exactly. And the other is it's bringing developing countries. It's bringing people who live in developing countries and don't have access to banking and don't have access to any of the opportunities to speculate. And this is the first opportunity to speculate. This was an interesting take that came from Ryan Watkins. He says, Memecoin mania is the closest thing we've seen to the 2017 ICO bubble. Difference is no one is even pretending they're launching or buying anything valuable. Bar is as low as it's ever been. Memecoins is the purest expression of greed and entertainment crypto's ever created.
I think a lot of people mid-curve this. They mid-curve Memecoins because they're like, well, what's its purpose? What does it do? What's its utility? And it's like, its purpose is literally just to not have utility. Its purpose is just to be a meme, right? And memes are a thing that exists on the internet and are fun. And speculating is fun. Obviously, every sort of speculating service that's out there in the world, an app, has blown up in the last 10, 20 years with the internet. And so like you have a combination of just like memes being fun and speculation, which a lot of people just like to do, unfortunately, or fortunately, whatever. And it's just a combination of the two. And like he says, it's just a pure expression of that. And that is a use case in and of itself. If you don't like it, that's fine. But don't mid-curve it, don't hate it or fade it because it's real and it's not going anywhere. I'll tell you that. I'm not saying that they're all going to do well and go up forever. I'm just saying that the idea of meme coins is here to stay. And it's up to you to try to wrap your head around it.
One question that keeps coming up is, should meme coins create utility? Are you better to stay as a meme coin forever, or should you try to build something? You've got a big community. You could come together. You could build something. And we are seeing this right now with Degen. So Degen is a meme coin that launched in January, and it launched through Farcaster to the Degen community on Farcaster. And essentially, their aim was to create a token that could be used for tipping on Farcaster. So if you're a builder or a content creator or a user on Farcaster, you can easily reward others for their cast by tipping them for posting quality content using Degen. So far, there's over 53,000 holders and over 500,000 transactions. I actually think it's up to 1 million transactions, to be honest. Over 1 million transactions. And correct me, I'm wrong. There's over 118,000 holders, market cap of 1.6 billion. So it's a very legit meme coin. Now, last week, I know, isn't that funny to say legit meme coin? Last week, they launched Degen Chain. This is an L3 built on top of Arbitrum Orbit, which is Arbitrum's tech stack that you can build your own L3 on top of. And they've launched this as a way to create utility for their token, because now the Degen token is going to be used as the native gas token on the Degen chain. I haven't looked super deeply into the Degen chain to say whether I believe in this as a L3 that can create the growth necessary in order to succeed as an L3. You obviously have to attract a ton of builders and a ton of developers and a ton of users. Not an easy thing to do. But Kai, interested to get your take. What do you think about a meme coin trying to create utility and launch a chain?
I mean, Dogecoin, well, no, was it Doge? Who was the...
Shiba Inu.
That was it. They tried to launch an L2 with their own chain or something, and they completely screwed it up. But here's the interesting thing. The beauty of meme coins, as you said, is just a pure expression of gambling, right? And there is no utility. There's no use case. You can't value it. So if it goes to $10 billion, you're like, whoa, is this thing overvalued, undervalued? You're like, I don't know, it's just a meme coin. Once you start to add utility in the sense of like, okay, now I'm going to add a chain. Well, now it's like, I don't know if this is a good thing necessarily, because now all of a sudden we're comparing the Degen token to other L3 tokens or L2 tokens, for example. And you can start to like compare it. And you go, well, if this thing's worth 1.6 billion, but Manta token over here, which is an L2 that has way more users and way more TVL, is only worth 1 billion, maybe this thing's overvalued. And all of a sudden, it's like, to me, I think that it might just perspective-wise be a bad thing for its value. But I mean, because in a bull market, you don't care about these things necessarily. You're just like, it's a meme, so like let it go to whatever. But once you can compare it and try to value it versus something else, I think that might hold it back. I don't know. Let's see. Like, obviously, if they end up turning this into something real, to me, that's better. They can create some fundamental utility out of it. But again, don't mid-curve meme coins. If it's just a meme coin, let it just be a meme coin. So I don't know. We'll see. I don't know if more are going to do this or what, but I'm sure this will be the trend. It happened with NFTs last cycle too, right? There's a bunch of NFTs. They didn't really do anything. They were just pictures or art, as some people call them. And then they all were like, okay, now we're going to add utility around NFTs. And like, that didn't really work so well for most of them, except for like Pudgy, who made some toys. But most of them didn't do too well in their utility efforts. So we'll see what happens with meme coins this time around.
And here's what's happened on Degen Chain so far. So since their launch, they've onboarded over 130,000 addresses, had over 4 million completed transactions, over 700,000 total contracts deployed, but most of them have been rugs, only 290 verified, and had over 2,300 tokens launched, also mostly rugs. So here's the issue. If you're trying to launch a chain, in order to do that, you need incredible marketing and you need a team that can attract top talent developers and founders to build useful apps and tools on top of your chain. And who does a meme coin attract? Degens and potential like ruggers. I don't even know what you call them. Ruggers? People scammers. Like that's who.
The only thing I would say is people want attention, and Base and Degen, they've got attention. So people go where the attention is. So they've got something, but that's it's messy over there. Just if you're going to play around on Degen, it's called Degen for a reason. Be careful, but hey, have fun.
Speaking of Degens, SBF is going to jail for 25 years, everybody. The case is done. We can put it to bed. We can stop talking about it. I mean, you know what? You can be sure he's going to appeal. But Judge Kaplan, who is the judge presiding over this case, came out and threw down the hammer, gave him 25 years. Here's what he said. Sam Bankman-Fried's exceptional flexibility with the truth, apparent lack of remorse, and numerous instances of perjury while on the stand last fall contributed to the ultimate decision.
Well deserved. Well deserved. SBF, see you later. I hope it's the last time we ever have to talk about him, Jay.
One thing that we should keep an eye on, though, with SBF and FTX is what is going on with the FTX estate, because there is a buck ton of tokens that FTX owned that are going to eventually come onto the market. And in particular, there is $7.5 billion worth of Solana that is locked up right now and is available for sale. Obviously, with the current bull market, there is apparently a lot of attraction from private investors to buy this $7.5 billion. Some of it has already been sold. Neptune Digital purchased about 26,000 SOL at a $64 per token earlier this year. Incredible price that they got on that. That's the amazing thing about these private sales. You can get great deals. But here's what's going to happen. These tokens are going to become unlocked in 2025, and some of them actually vest until 2028. So when these tokens come unlocked, great for the private buyer who's going to buy these tokens at an incredible discount, as long as you believe when the price can be higher when they come unlocked in 2025 or beyond. But also sitting here ourselves as SOL holders, what does this mean if all of a sudden $7.5 billion of SOL becomes unlocked?
Yeah, there's more than that. There's a big unlocks happening in 2025. So look, super bullish on Solana, have been for a while, been calling it at, under $20 in pro reports, saying that you guys should be buying it. But it's not one that you want to be holding at the end of this cycle. And the reason is, let's say that the bear market starts sometime in 2025, which is what we're sort of predicting right now. And when tokens start unlocking, at that time, you start to bring a bunch of supply on, especially when it's institutions holding them. They're going to be selling just automatically, whether it's all of it, 100% of it or not, doesn't matter. But what matters here is that that's a lot of sell pressure on these tokens. Something like ETH, Bitcoin, they don't have this. All their tokens are unlocked. There is no new tokens other than like Bitcoin, for example. Some of it gets mined to miners, then they have to sell to pay their electricity, but that's happening all the time. But the worst combination is when unlocks happen, when you also have liquidity no longer coming to the market, which is what a bear market is, because there's just no one to buy those tokens. And so the price of the token has no choice but to go down. It is why most tokens in crypto go down like 80, 90%. It's because what happens is most tokens launch at the beginning of a bull cycle, and then they have these vesting periods for 1 to 2 years. How long does a bull cycle take? 2 years. And all of a sudden, all the tokens start coming out into the supply at the same time as people are starting to remove their capital out of the industry, and these tokens just get wrecked. Solana, I think it's going to do extremely well this bull cycle, but it's not one I'd be holding in the bear market. It's one I'd be buying back as it gets lower, but again, I think it probably gets wrecked to the tune of 80% plus, just like ETH and others have previously. But that's the one differentiator between Solana and the two big majors.
I might start to call token unlock sour milk. That's what a token unlock is. All of a sudden it's milk that's so good, and then the unlock happens, and it's like the expiry date. It's sour.
I like that. That's a good one. We need more milk memes.
Definitely. Okay, let's go to our final segment of the show. Every week we do an agree-disagree. This is where we pull up a handful of tweets or takes that we have seen around crypto, Twitter, and we talk about them, whether we agree or disagree with them. Let's get to the first one this week.
And by the way, listeners, if you have any good agree, disagree takes that you see on Twitter, a post that is, has a strong opinion or that you're unsure of and you want us to comment on it here, tag at Milk Road Daily or share it in the Discord if you're a pro member, and we might pop it up here and talk about it next week.
First up, Evans6 says, market is saying loud and clear, new coin good, launch your token.
Yeah, without a doubt. I mean, if you look at, just Wormhole's token, to be launching at a $14 billion valuation FTV to start on day one, that's pretty next level. Now, it appears to be going down, but it's holding pretty strong there. I mean, EtherFi is almost at $1 billion, and that thing launched just recently, billion market cap. So, these tokens are coming out at massive, massive prices. Athena was also over $1 billion. So now is the time to be launching your token because there is a lot of demand right now. So I agree completely.
And that's why the points narrative is not slowing down. It's only picking up pace. I feel like I read an article the other day that said 40 billion points have been released so far. I don't know how they would have found that number because points are off chain, but somehow somebody did some research. Points are going crazy. New tokens. Yeah, let's go. Okay, next up, Hashcoff says, I really don't understand why people keep trying to fit this bull run into the framework of previous cycles. So far, we have broken basically most this is how the cycle goes rules. 2-year bear, wrong. No all-time high till after the halving, wrong. ETH leads the alts run, wrong. Break all-time high on BTC, then everything up only, wrong. I'm sure there are plenty of other examples as well. Did anyone stop to think that maybe taking 3 data points and trying to extrapolate that framework in perpetuity is a mistake?
Yeah, I completely agree. There is a lot to learn from past cycles. We talk about it a lot in our pro reports. Actually, one coming up on Saturday is all about pullbacks and looking at the pullbacks of previous cycles and what you can learn from it. The key thing is there's only been a few cycles. And so you can't rely solely on 1, 2, 3, whatever data points, because they rely on only a few cycles, right? If any, like the ETH one, there's been 2 ETH cycles. That's it. So there's no way you should be taking that as gospel, right? And so, yeah, you need to get a lot of data points and you need to be flexible on these as well. You can't just be like, because this happened last cycle and the cycle before that, doesn't mean it's going to happen again. So you need to be fluid with your thesis.
Fluid with your thesis and subscribing to Milk Road Pro, because we're going to make sure you have a thesis. It's amazing to me how few people have a thesis in this space. Let's go to QW next up. He says, I see no reason why leading L2s wouldn't eventually become L1s. They'd be valued by the market an order of magnitude higher, and they'd realize what I've realized by being in the trenches, that dApp builders are pragmatic and couldn't care less about ETH alignment.
Yeah, this one I actually disagree with for a few reasons. One, I don't think this ETH alignment thing is actually that big of a deal anymore. I think that's a bit of a narrative that specifically people not in the Ethereum world keep trying to push and try to make it like this weird thing that these people are doing, but they're really not. The reason that people are aligned with ETH and building L2s on top of Ethereum is because it's super difficult to build an actual profitable L1. It is very complex to get, hundreds of thousands to millions of validators to secure your blockchain to make this thing like a relevant blockchain. That is extremely difficult and not something that just everyone is going to be able to do. I mean, even you think Binance Smart Chain has 18 validators. That thing's not going to exist in the future unless they figure something out there, but it could exist as an L2. It's much cheaper, less complex. It makes a lot more sense to run an L2. So yeah, I don't see a reason why L2s would switch out and be their own L1. It just adds way more complexity. Doesn't really make sense.
Okay, next up, Dylan Leclerc says, the US government is insolvent. This ends in tears. Sorry to burst your bubble.
Yeah, I mean, the Bitcoiner take, look, the US government is not insolvent. That's because they can print as much money as they want. So it's actually not true. Now, of course, they are super in debt and what they're doing to the currency is terrible. And, every government really is doing this. It's not just the US. But does it end in tears? This is the thing that I always sort of debate. I think what they're doing is terrible, of course. It is bad for most people, of course. But does it end in tears? At one point, I did think that. And then when I realized about Bitcoin and I learned about crypto and everything that we're building over here, it's like this parallel financial system that you can sort of opt out of this thing that could end in tears, and you can just opt out and move over to this one that's all good, And so when we talked about those flows earlier of Bitcoin, just passively people buying more and more of this Bitcoin ETF in their savings and their retirement, et cetera, this is like how I see the adoption of crypto. It's just all of us, as we learn about it, I dollar cost average every month. And that's just me moving from the old financial system to the new one. And if enough of us can just keep doing that, which we all are, every year more and more people do this, I don't know that it ends up being this big like bust or big, end in tears, like big problem. It would if there wasn't something to there wasn't a life raft, there wasn't something to save us. But the fact that we have something that can save us and more and more people are learning about it and starting to use it and starting to move their assets over on a yearly basis, daily basis even, maybe it doesn't end in tears. This could just be the optimistic take that I have because I'm an optimist. But as long as we continue to move over, I don't think it's this big drop off. For some people it might be, and that's unfortunate. But I don't think it's just going to be like one day all of a sudden it's over. It's just it's a Bitcoiner take. I just don't think that happens. And it's the other thing. Yeah, the other thing to note is countries can push this for a long, long time. Everyone's been saying the US dollar has been done for decades now, and it's not. It continues to be a strong currency versus all the rest. They can just keep printing money.
Well, not to mention that these stable coins that have taken off the money are all USD stable coins, which are basically saving the US dollar right now. Yeah. Well, not right now, but long term likely will save the US dollar. So yeah, I think, look, this is a classic tweet to get a bunch of clicks and get a bunch of Bitcoin maxis excited. I think it's true in its overall take, but I don't think it's as drastic. It's not as black and white as this. Okay, last one of the week. Tang Yan says, okay, let's be intellectually honest here. Almost all project tokens are meme coins today. Zero claim to any assets or revenue. It's just a matter of how good/strong your meme is. Lessons can be learned from the top performers this year.
Yeah, I agree. I mean, the biggest meme coin of them all right now is Bitcoin, right? Bitcoin doesn't have any utility. It is just a meme. It's just a very successful meme, and that is the biggest meme coin of them all. There are assets that are trying to become something where you can claim and have yield and have revenue. I mean, ETH, for example, is one of those. It's probably one of the only ones. That doesn't mean I'm an ETH maxi. It's just the reality. There are some other tokens that, do generate revenue and real yield. Most are inflationary yield, like something like Solana would be, and most L1s. But in the early days, currently, yeah, most tokens are definitely meme coins. But their meme is, hey, I have this protocol and it makes revenue, or it has a lot of users, and so my token must be worth a lot. I mean, Uniswap, for example, that hasn't had this fee switch for its entire life, is just a meme around the Uniswap protocol, right? The only person or groups that makes money from Uniswap, is Uniswap Labs, and then those that are providing liquidity. But token holders, they have no say. They don't make any money from that. So it's just a meme. Now, of course, they might turn that fee switch on. That would be the game changer. And that's why I always say, I think the real super cycle comes when we figure out how to drive protocol revenue to tokens, which hopefully Uniswap will lead the path for.
All right. That's a wrap on today's Milk Road Radio. If you are still listening, we want to hook you guys up with some Milk Road swag or a free Milk Road Pro subscription. All you got to do is follow, like, or subscribe to Milk Road Radio on Spotify, Apple, YouTube, wherever you are listening to this. Take a screenshot, post it on Twitter, tag at Milk Road Daily, and next Tuesday, we will pick a few of you to win some free Milk Road stuff. Also, if you're not already a Milk Road Pro member, right now, we've got a 25% off discount to celebrate the launch of Milk Road Pro and the launch of Milk Road Radio. So many exciting things happening over here at Milk Road. And the Milkman wants to hook you up with 25% off Milk Road Pro to make sure that you capitalize on the opportunity of this bull run. The next year is going to be big. Many millionaires are going to be made, and we want that to be you. So click the link in the show notes. Have a fantastic weekend, everybody. Thank you so much for listening in. We're super excited to be launching Milk Road Radio. Touch some grass, hug your lovers, hug your friends, hug your family this weekend. We'll see you guys next week. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your number one resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.